All right. Good morning, everybody, and welcome. It's TheoTrade chat. It's Don Kaufman here on a Monday morning. Well, let's get right to work. There's a lot going on, obviously, in markets this morning. One of the things that now, obviously, everybody's it's going to grab their attention is the S&Ps are down just over 1%. The Nasdaq's actually falling a little bit more. Um, Down the list, some of the usual suspects, there are a couple of interesting areas in this morning's trade that are unexpected, and I wanted to get to those. First of all, the U.S. dollar bid right now doesn't surprise me in the least. I think a lot of people are probably taken back by that. I'll talk about that after the cash open. Don't be surprised by the U.S. dollar when proverbial crap hits the fan. Where does everybody run to? Hold me. The gold trade. Holy crap, did this get volatile in the last few minutes? I mean, just the last couple of minutes, it's just getting wild inside of gold. We'll bring that up. Here's actually one of the surprising areas. We're not buying bonds this morning. It's a huge reversal inside of the bond market. But to get down to it with 90 seconds to go to the cash open, what you really want to look at is there's a lot of intensity to the trade this morning. That's important. Okay, a lot of intensity. What does that mean? It's 460,000 contracts. That's the heaviest that you've seen lately by double, a little over that. So it's the volume is literally 100% greater than it has been any recent trading sessions. So it's going to be a bit more of a serious session, obviously, because the S&Ps are down 1%, but we are way off of our lows. Like, you're 40 handles off the lows. They were down, 100, 115, 120 at one point last night. So you're going to come into a cash open, and the big question mark on the cash open here is, what is the advanced decline line going to look like? Now you're going to say, well, this is up and that's up. And so you have the financials down big. The energy sector, though, the energy sector is a huge bid under it, huge bid under the energy sector in early trade. And that is going to keep the advanced decline line slightly sustained. Most of your tech companies are down, but there's nothing of critical like nature, meaning like there's nothing that's moving dramatically and really a standout. Let's come to today's cash open here. Key in this cash open is how negative its advanced decline line. Are we seeing greater degrees of correlation? Okay, and the answer to that is somewhat. We're not exactly home yet, are we? So we have 81 stocks trading to the downside. We're not fully correlated, but the stuff that's up is stuff that you would expect. Anything that's involved in defense, okay, anything that's involved in like oil is actually going to have some degree of a bid under it this morning. Nevertheless, okay, across the board, you're actually seeing big tech take some degree of a hit. And as I was pointing out in like the pre-market here, I don't see any critical standouts in here. I am a little surprised that Netflix ain't going to sit home and watch crap because we're still buying a little bit of Walmart. So the rotations, okay, they're not completely dead. In fact, we may even rotate a little bit more. Again, Walmart is a kind of a key in here. Costco is a key in here. They're still rotating towards them. In this particular instance, though, Caterpillar is down. Caterpillar's been getting killed the last 2 to 3 trading sessions. I say killed. I mean, look, it's down. It's down a few percent from being up, some 30%. Now it's only up. It's 8% hit though in 3 days. It's a big boy move. No questions about it. Okay, and of course, there is some decent movement in terms of volatility exposure. Nonetheless, okay, as you come into today's cash open, one of the first things you have to say in a day like this is, sit on your hands. Okay, you're going to have to wait a little bit. You know that the bid offer spreads are going to be incredibly wide. There's not going to be a whole hell of a lot you can do. I already know that I have a butterfly sitting in Apple. Okay, and in the first minute of trade, the butterfly was working, and the second minute of trade, it's not working. Gotta love that crap. Um, uh, you know, how much risk, okay, is real right now, okay, and how much risk is just a knee-jerk reaction to a geopolitical event? And I would have to say that the vast amount of the risk, okay, is the latter of those two, meaning that Why would Microsoft be impacted by this? Likely it's not. And that's probably why, investors are like, I'll go buy that. I'll go buy that. Why would Apple be influenced by it? Probably not. But with all due respect, Apple has actually been your safety trade. So if we're going to buy stuff like Microsoft, okay. By the way, if you buy Microsoft, I do have a butterfly up there too. So if we buy Microsoft, okay, we might actually sell Apple. And I want you to think about that. We're rotating now within the sector itself. Okay, dogs and cats living together. Um, Again, I don't want to really dig too deeply into the geopolitics of this, other than to say, and I said this over the weekend to Garrett because he was talking about oil and so forth. Like, just always remember something, okay? And anybody that's traded or been around geopolitical or war events, war is incredibly unpredictable. I know that the prediction markets, okay, are heavy on this. But I'm actually very curiously watching prediction markets. This is the first time, okay, in history that markets are literally being traded, okay, around this conflict. And although markets have always been traded around conflict, specifically because of contracts like oil and so forth, always been traded around conflict. We're now looking at, every nuance of this conflict being dissected and actually traded. And I often ask myself, does that possibly interfere with the outcome of the conflict itself? As wild as that may sound, it's highly likely. With that being said, at this point, I'll watch some of the prediction markets. Pretty straightforward as to what they are. I didn't necessarily intend to bring them up and talk about them too much today. By the way, what's driving markets right now? It's Nvidia. Nvidia is ripping. I mean, just ripping out of the gate here this morning. As I said, the advanced decline line is also, it's still really south. Okay, but as insane as this may sound, and it's one of the points I was making on the weekend update. On the weekend update, for those of you that actually did tune into it, and I'll kind of deviate for a second from prediction markets. I'll spend time tomorrow on prediction markets, and I'll actually bring them up because there's so much going on. But when you start to actually dig a little deeper, and one of the things I was bringing up in the weekend update, okay, the market capitalization of Nvidia, okay, is of such magnitude right now. I'm not sure geopolitical events necessarily really persuade people to necessarily sell Nvidia unless it was of much more serious nature. You say, well, why? Okay, markets get sold, it's risk off across the board. It's not necessarily markets are getting sold and risk off across the board. Okay, I mean, the market cap, you're up almost $2 in Nvidia. Okay, with 20, let's just round it, 25 billion shares in the float. That's $50 billion in market cap. Okay, the exposure that we're talking about in Nvidia, just hear me out for a second and why I don't think that conflicts, okay, geopolitical conflicts have that much influence over here. Okay, you're moving $50 billion of market cap in Nvidia. You're 6 minutes into the trading session. Okay, that's bigger than the conflict. It just is. And you go, well, no, the conflict's going to cost more than that. It's $50 billion, okay, of market cap just moved. Moreover, if you take a look at Microsoft, add a little Microsoft into that. Microsoft's up 245. It's good, for another. I mean, we're talking. You start adding up like Microsoft and Nvidia, okay, and a few others that are definitely moving in the conflict. By the way, speaking of ripping, holy crap, an Nvidia move. You're talking now, okay, upwards of 300. I'm just glancing at this, and I can tell you off the top of my head, it's about $370 billion of market cap that's moving around this morning. And as much as you want to, look at the geopolitics of it, I'm sorry, this actually equates to far more. Okay, equates far more to the GDP of any one of the places that are involved in the conflict, and then some. Oil is last century's, conflict. Okay, it just is. Does it matter right now? Are you dependent on it? Hell yeah, you are. Okay, but to speak to oil, all right. So yeah, it's up 6.5%. Golf clap. Nobody cares. Move on. Okay, because all the oil pretty much that's going to be pumped, let's say, I don't know, in the next year, isn't worth what the market caps have probably moved this morning. Okay, in big tech, and that's pretty big statement. It's also kind of wild to say, but it's the reality of it. So the question is less, in my opinion, the question is actually less about the geopolitical events. It's just more about the market, okay, and the reaction. All right, are we actually going to stay under the 68.50? Okay, because in the end, if you just kind of blank all the geopolitics and push it aside for a second, all the market gives two craps about is where the gamma risk really lies. And it's quite ironic that we just basically tagged, just take a look. You just basically tagged 68.50, okay, pulled back off of it. It's also quite ironic that the most of the evening we actually channeled in around 68.11, which here at TheoTrade, and I'm not sure even Garrett has actually been around and heard this long enough, but you know, the 11 handle in every 100 block in the S&Ps, okay, the markets tend to gravitate towards. I've asked everybody I know that builds algorithms in this industry about that, and they all agree that it gravitates towards the 11s, and nobody has an exact reason why, other than, you know, I've been told they're like, there's a lot of memory to those algorithms, okay, and the memories are perfect, and it, you know, I think it has to do with staging before it actually breaks through, but nevertheless, okay, we hung out at that 11 handle for a substantiated period of time. Take a look at the 30-day 1 hour. 30-day 1 hour, what can you say about it? Well, in the overnight session, we got very, very close, okay, to some of the lows that were actually put in. These are actually the lows that were put in. This is relatively early February. Granted, we're in March right now, but those lows were actually put in. If you go back 180-day 4 hour, okay, anything lower than 67.50, okay, then you got to really start to talk about the time frame, of course, of November. So are we out? Okay, are we out of this channel trading that we've been in? No, we're not. In my opinion, we're not. We haven't fully broken down. And today, okay, again, and I just want to stress this again and again because I said there's a lot to cover today. But today, to me, is much more about the range and less about the geopolitical events that are transpiring. Again, look, you can talk about, you know, Iran, and you can talk about the Middle East and geopolitical events till you're basically blue in the face, not going to change anything. And moreover, as I started with, war is incredibly unpredictable, incredibly unpredictable. Okay. I can't tell you how many times I have been on both the right side and the wrong side of conflict. And it's not, you know, I have literally bought oil, okay, but on the wrong side of that because the conflict ended so quickly. Last night, just so you guys know, if you want to talk about some of the geopolitical events, what actually drove markets really low and what actually freaked oil out, there was a drone that actually came from Yemen into Saudi Arabia. That really freaked markets out a little bit inside of oil. Okay, that's the kind of stuff where, when I say it's completely unpredictable, you don't have a clear picture. Okay, you don't even know who's involved right now. So it's just, and again, this is just my opinion. Okay, you got to stop with that crap and allow the marketplace. And again, when it comes to geopolitical events, okay, it's not that, you know, don't watch the news and don't watch this. Look, okay, we're all drawn to news, you know, like a moth to flame, especially, you know, when it's conflict and so forth. And speaking of news, like I would say that 90% of the crap on X was just fake. Like literally 90% of the crap on X is fake, being posted by people from the Middle East. It was just crazy, like how much fake stuff was on there. Nevertheless, when it comes to trying to disseminate information around conflict, okay, like literally, like you're thinking about like war footings, and you know you're thinking about taking positions. Okay, with all due respect, read the market. Don't try to think through it. Read the market. There's no thought necessary. You know, people are going to ask, well, why did they rush to the dollar? I have said every single time, okay, every single time you'll hear me say this, Okay. In the end, if you're one of those people like the dollar's going to zero, man, it's de-dollarization, man, bricks. Okay. You're nothing more than an insane conspiracy theorist because for the last 50 years, okay, for the last 50 years, the United States has done everything plausible to make sure that our crap is better than their crap, which basically implies like the dollar. Okay. If you want to know where people are like going to put capital in the time of like, real duress, they go to the US dollar. Where you can go? You can go to China? You can go to China? How's that going to work for you? Okay. Maybe get a couple of restrictions and never get your money out of there. Okay. If you actually look at people from, that have capital in Iran, where are they going to go to? In some way, shape, or form, they're going to the US dollar. Okay. I mean, they are. I mean, capital is going to flee the coop there like you've never seen before. Okay. For those of you that don't know this, the original Gulf War, I'm talking about 1990, 1991, the original Gulf War before, okay, Iraq ever invaded Kuwait. The Kuwaitis, there was huge amounts of capital flowing out. Nobody knew why. So clearly, that entire attack took Kuwait by surprise. Clearly wasn't by surprise. They knew they were coming because look back at the history of it. Tens of billions of dollars were leaving this small country that nobody even really knew about. And it really freaked out. I had family that were heavily in finance, obviously, at that point. They were in the middle of a big deal and they're like, what is going on? And then, of course, 24 hours later, there's an attack. But in the end, okay, by the way, the Kuwaitis were actually moving capital to the US dollar in a huge way. And you guys can look back at the stories, the history of it. It's quite interesting. Here we have this massive bid under the US dollar. It's safe to trade. Okay. Why? Because there's nowhere else to go. You're not going to be like, oh, I got to buy some euros, man. Oh, I can't wait to buy some euros, because Christine Lagarde is doing so well with the ECB. Okay. That's not a political statement. She sucks. That's not political. She does. She's, okay, the most powerful person in Europe that should be in jail. All right. There's one that really should be in jail. Okay. It was financial crimes. Don't worry. She just runs like, finance for all of Europe now. Anyway, whatever happened to Mario Draghi? Where's my Mario Draghi when you need him? Okay. His political career is not going to be over. Okay. Mark my words. He's coming back. So you rush capital into the dollar. Now, what is interesting about that is you're rushing capital towards the US dollar. What is interesting is to see gold up with US dollar up because oh boy, you realize that if the US dollar was flat or down, that gold would be surging above and beyond. To see gold up with the US dollar up though this much, that's intimidating. It really is. And the fact that gold is actually matching some of the recent highs, which actually brings into scope silver. Now, silver, okay, all right, listen, silver got all kinds of crazy. Okay, silver got crazy again. What is interesting is that silver is actually diverging this morning substantially. Okay, silver, again, if you're not looking over here, contract is actually down and not down minimally, it's down over 3%. So I thought you guys would find some of this interesting because maybe you're looking around, but everybody's eyes are kind of focused on the S&Ps this morning. I'm just not critically focused on the S&Ps because I just didn't really anticipate like you can come in this morning and be like, oh no, I'm freaking out, man. This market's getting killed. Absolutely not. Okay. Everybody's going to come to their senses and be like, who gives a crap? Okay. Because that's what we do. All right. Who gives a crap? Because with all due respect, nobody gives a crap. You own Nvidia, right? If you own the S&P 500s, you are Nvidia. You're Meta, okay? You're Microsoft. Speaking of Microsoft, are we home yet? Okay. Oh, bring it home, Microsoft. Just rally a little bit more, right? And that's a big butterfly too. It's like a 750 wide butterfly. Okay. Microsoft is so ridiculously just beaten down and oversold. This thing pops into the 400s, and I'm going to start screaming, winner, winner, chicken dinner. I have a butterfly there, and then I have a butterfly here. Okay. So I trapped a bearish butterfly in Apple, a bullish butterfly in Microsoft. One of them will hit today. And since I only paid 48 cents for the Apple butterfly, 48 cents for an Apple butterfly, okay, I think I'm doing pretty good. Come on, show me butterfly. See, 48 cents. I didn't pay that much more for the Microsoft. The Microsoft's a big boy butterfly. 83 cents for that one, but that's a big boy butterfly. Okay. Who likes his big boy butterflies? I do. I do. I seriously, I have problems. Do. Okay. Speaking of butterfly, let's just price it. Shh, don't tell anybody. We're going to price it. Okay. You can get out with almost 100% gain. I don't want to yet. Okay. I don't want to. I don't have to. I don't even need to. I kind of want it. What I really want to do is get out of the Apple butterfly, wait, and then get out of the Microsoft butterfly. All right. And we'll see if that actually happens. So, as I said to you this morning, I didn't come in and like all hopped up, thinking we're going to absolutely tank. Okay. I would say, though, that hitting 68.50 over here is absolutely of no surprise. Now, here's where I don't have a feel at all. When you come back, you just rally back up to 68.50, and everybody's like, we're bullish, we're bullish, we're bullish, we're back to 68.50. Okay. Don't get all bulled up because this is going to be a key inflection point because now the marketplace, okay, rallies back up. It can just spurt and just sit here all freaking day, which would torture every one of us because you're like, I showed up to see a fight. And what do you got now? You got absolutely nothing. Your fight really sucks. Okay. This is, it's just not happening. Meanwhile, oil, okay, is actually seeing some sell side activity. Come on, where's your geopolitical risk? Where is it? Yeah. Again, you can't handicap it. You just can't, right? The only thing we could see coming in, and I was talking about the weekend video, and I apologize. I was talking about the weekend video, and then I got distracted. Okay. I ended up off in the weeds a little bit. On the weekend update, there was specifically a phrase I was actually using on the weekend update, and that's this. Vol looks all wrong. Okay. So there's also 68.50. So, but vol looks all wrong. And at the time, I thought to myself, I'm like, I didn't want to say, oh, maybe it is geopolitical risk. I said it on the video. Maybe it is geopolitical risk. Who cares? Okay, it doesn't really matter, right? But vol is all wrong for the situation going into the weekend. So when you start looking back and you start thinking to yourself, okay, yeah, maybe somebody knew something. This is my argument for markets. Okay, markets are smart. There's trillions of dollars. Literally now it's trillions of dollars are at risk in any given day, and they could actually see this risk coming. Evidently, they did. They saw the risk actually coming in some way, shape, or form. Whether they knew it was going to be geopolitical risk or not, it's neither here nor there. Markets actually saw the risk coming. The VVIX was elevated to 110. We didn't exactly did we have like a heart pounding, week? Okay, last week? Hell no. Okay, like what happened last week? Well, okay, last week we were here and then we ended the week here. So we ended the week lower, okay, but not by any large margin. I mean, it was nominal, but the volatility, as I said to you, the volatility was all wrong for the situation. And I want people to remember that because you're going to see things on the screen. You're like, that doesn't look right. Okay. Pay attention when you're like, that doesn't look right. Pay attention because that's usually a pretty damn good time to execute into a trade. Apologize. I'm looking at Google. So I know Google was up a little bit, but we're not home yet. Anyway, onward and upward. So, pay attention to things that you feel, okay, don't look right. And all of a sudden you'll see like a geopolitical event happen or, okay, some stock releases numbers. So you kind of think to yourself, did somebody know something? Yeah, maybe. I mean, literally, maybe somebody did know something. But the truth of the matter is, okay, you don't necessarily know what the event is going to be, but you could see coming into this weekend, literally on Friday, I could see the volatility was all wrong for the situation. So there was, a probability, associated with the geopolitical risk. But did you see me run out and buy oil? I didn't. Okay. I didn't necessarily buy oil because quite frankly, okay, I'm not convinced even with the geopolitical events that oil was necessarily going to pop. Okay. Oil popped, but I think that was actually not on the initial events, but what actually transpired a bit more, like last night where oil really started to take off to the upside. Okay. So again, it's not necessarily what you know, it's what you see on the screen. And I always stress that to people because they get so infatuated, okay, with every single number thrown out over here. I'm going to tell you, your infatuation right now should be 68.50, because as I just said 5 minutes ago, you're going to stop there. You're going to stop at 68.50. You're going to retrace. Okay. Now you got a shot at going back down. How did I know this be the top of it? Okay. Look at the range, people. Look at the range. All right. You knew this would be a stopping point along the way. 68.50 holds humongous weight in this marketplace. Okay. And it continues to hold huge weight. I can go all the way back, and I'm actually going to contract adjust this one just so you guys can see. Go quickly because I got a lot of crap to cover this morning. Okay. But right at 68.50, in fact, I'll even draw a line on your screen. Basically where we're at right now. Look how far back, okay, the 68.50 kind of resonates. It actually goes back to where before this volatility box kind of started. All right, you can see actually some highs over here. And listen, people always ask that, why 68.50? The hell should I know? Yeah, I don't know. Okay, seemed like a good special number, 68.50. Okay, markets, they tend to gravitate towards certain levels. Okay, and then they just stick to them like glue. That's all you know. Okay, and you shouldn't think much beyond that. It's predominantly because a lot of algorithms, there's algorithms traded constantly, right? So, you're trading in an algorithmic order flow kind of a marketplace. It's just computers trading against computers. But the one thing I can tell you about the computer systems, their memory is absolutely perfect. Okay. It is flawless memory to the computers, which you're like, okay, are you flawless memory? No. Okay. Your little chipset over there sucks. So, but it has flawless memory. And specifically around like levels and where there's risk at. Okay. So not only does it have flawless memory of where it's traded, it also knows exactly where the risk kind of lies. So if there's this ball of risk sitting in a trading firm, okay, and the risk is in and around 68.50, it'll actually be a pause point. It doesn't mean, and I want to be clear about this, it doesn't mean that we can't rally today. It just would be some type of a pause. I mean, if this trading day rallied back to 68.50 and sat there and skirted that line for the next hour or two, I'm not the least bit surprised. It's not like I want to see that. Okay. I want to see some fireworks in here, sure, just as much as the next person. Okay. But the reality is this level, the force is strong with that level. Okay. So onward over here. So apologize. I'm taking a quick glance back over at this one. Oh, it's getting close. Okay. It's getting close. By the way, yeah, all butterflies are going to expire that I do today. That's why they're 0 DTE butterflies. Okay. 0 DTE. Okay. 0 DTE. What does it imply? I can't get it out. It implies, okay, today's the day. It's the only day. Come on, Apple. One of those two butterflies is going to get good. By the way, if you're in either one of those butterflies, if you're in the Superfly 0 DTE, if you're in either one of those butterflies, okay, do you see me clicking on anything? No, you do not. I'm going to wait my freaking turn, and so are you. Okay, hold the line. You need to be like Braveheart. Hold. Okay, don't panic. Everybody panics. What's the fun in that? Okay, although I might take 100% on the Apple one and then see if the Microsoft one comes in. That would be pretty freaking sweet. Ah! Okay, so Todd's getting yelled at already this morning. I'll take a shot here and just get out of it early on. I'm actually working. I'm working my butterfly for $1.05, which is just over 100% gain, which is not very much. Okay, but I'm not that much into that butterfly anymore. I don't give a damn about the Apple butterfly. The Apple butterfly, I just kind of want to get out of, right? So I just want to take my 100% gain, and this is what I call whack it. Okay. This is called whacking a fly. Still working $1.05, but like, what are you talking about? Okay. Talking about my fly, all right? That's going to fill. Survey says filled. Okay. That is going to fill. So we're out of that one. We're going to send that one out. And you know what? I got to trade this in another account too. All right, we're okay. We're okay to go. And then, oh, there's a big boy fly over here. That's a big boy. I'm not getting out of this one for a while. So I took 100% gain. Took 100% gain in an Apple Butterfly this morning. And the reason I took the 100% gain in the Apple Butterfly is I wanted the Apple Butterfly to finance my need to hold the Microsoft Butterfly. And I'm going to sit like this all day. And I'm going to give you the big middle finger when you tell me to get out of this butterfly, because I'm going to wait. Okay. Because these bastards are going to pay. I want Microsoft above 400, and I think it can get there. You like that? And we got out for 101, Todd. Okay. What are you, new? So anyway, the new guy over here. Okay. Uh, it's slightly over 100%, Todd. Anyway, here we're having conversations. By the way, I'm really not talking to myself. There is a guy. His name is Todd. He's listening right now. He doesn't like, okay, listening, but he is. And as he listens, we if we were sitting in the same room, we'd be throwing stuff at each other. That's what you do. It's good stuff. Okay. So it's good. Okay. The beatings will continue. Morale rarely improves. So I want to look at Google for a second, because I put the Google spread on. Okay. That's son of okay. I put the Google spread on the other day, and let's talk a little bit about price and where I filled it. So I put it on, sorry, this is another Google Butterfly. Basically, I paid like $1.10. I think I sent the Google trade out at $1.10. And this is a true in-out spread. So if I paid $1.10 for it, multiply that by 1.3. Now, hold on, because people get like, some of you have been here for a while, some of you are new, okay? New like Todd. Todd's been here for a couple of years. We still beat the hell out of him. Okay. I mean, he's not new fish like Garrett is. I can't believe Garrett's just had his, like he was saying today while he was live, Garrett's been here for like a year. Holy crap. Okay. How do we let that happen? New guy's been here for a year. Okay. So everybody, it's you get a little hazed over here. By the way, just to help that situation out, there's always one in the crowd here that always goes, you should talk to HR. HR is right here, baby. Come to Don. Tell me your problems. And I'll tell you, suck, go back to work. It's a crappy haircut. Anyway, in an in-out spread, okay, in-out spreads work like this. In an in-out spread, you're classically looking for there's movement in the bonds. Interesting. You're classically looking for, there's news out, obviously. 55% gain minimum is what you're looking for in an in-out spread. But there is one caveat, and the caveat is if you can make in the first three trading sessions, if you can make in the first 3 trading sessions, okay, 30% or greater, take it. So we just did, first of all, the in-out spread of all the strategies, okay, that we ever talk about here at TheoTrade. The in-out spread, to me, is one of the most straightforward, okay, and it is one of the most straightforward. It is also the strategy that I've probably traded, like, in terms of spreads, the most. Okay. I have thousands and thousands of occurrences, even in the last 10 years. The in-out spread is the very first class that I really put together here at TheoTrade. Literally, okay, we have thousands of occurrences, even in the last 10 years. So we went back and we actually looked at our trades, okay, and there was some interesting regression analysis of our trades. I don't look at like people like, I back tested my strategy and I used Pine to back test my strategy, okay, in TradingView. Okay, there's a lot of crappy data out there. You can back test stuff, but for us, like the best way to actually test anything, okay, and now it's incredible. Okay, I can take my trades and I can even put them into like, AI, and I can look at them and twist them around. There's so many different variables you can throw at it. It's unfreaking real. Cool it is to actually test it. One of the things we actually found is that if a strong move occurred, a really strong move occurred in the first 3 trading sessions, okay, you were likely to actually get counter action in the price in the preceding days. So if you can make as much as 30% in the first 3 trading sessions, okay, the answer was quite simple. Take the risk off the table. Just take the 30% and move on. Because what would happen is you would be up 30%, And then all of a sudden the trade would slip back against you. And so I noticed this visually. I noticed this in a lot of my trades. And what it basically came down to is I took it down, broke down the data, and sure enough, it was like it basically said like, look, Don, your timing was pretty good on those trades you got 30% on. You need to take 30%. You need to get out. You need to get out of the trade because what I was doing was not getting out of the trade, and I was waiting, and I was turning like winning trades early on into losing trades. It had to do with very strong moves. So nevertheless, okay, I'll leave it at that. And it's the first 3 trading sessions. So if you put it on a Friday, it would be Monday, Tuesday, Wednesday. So you have till Wednesday to make 30% or more. What's 30%? And that's the calculation I was going through. I was taking the $1.10, multiplying it by 1.3. Multiplying it by 1.3 constitutes okay, cost of trade plus 30%, which is $1.43. So I would come in here and I would work just one. I would come in here, create an opposite order, work one, and I would literally, I will put this at $1.43. Now, careful. I'll put it at $1.43. I will work one. I will only work the order, see, for a day. I will not change. I'm not GTCing this crap. GTC means good till cancel. Just work it at $1.43. And this trade this morning, okay, for a brief and fleeting moment right there, may have filled some people for 30%. Anybody? Okay. Anybody? I'm just curious if anybody actually filled that one. So curious if anybody filled that one. Interesting. So I know that some data came out because I could see it reflected inside of the bond market. Neither here nor there. Like, look, that data may shift a little bit of order flow, maybe shook us off the 68.50. It's only going to be for a brief moment though here. Speaking of a brief moment, okay. Come to me, Microsoft. Come. I have my arms open for you. The Apple trade is over and done with. Okay. Hopefully the old guy there got that trade out before it happened. Yeah, I said it, Todd. Okay. It's like, I can't believe you just said that to me. I did. Okay. I did. I like it. Anyway, Google is not going to fill unless we trade down quite substantially. You go, how do you know that? So here's like a really interesting aspect too. You can come in here and go create duplicate order. And you can see Google would have to be down like another $5 or $6 for you to fill. Okay, Google's got to be like under 300, which is exactly what I said. Like literally, I think I said that when I sent out the Google trade. My idea was very simple in Google. My idea in Google was Google's going to test through 300. I think that's what I sent in the email when I shot, or the alert when I shot the Google trade out. That was just my logic, is like Google, okay, test it here. I don't know if it's going to break through 300, but I say it's going to test 300. If it tests 300, our trade will fill and we'll get out nicely, profitably. Okay. Live to tell the story. Okay. Onward and upward. Not bad, right? S&Ps this morning. Okay. We're down dramatically. Now, a lot of people are like, how come you didn't trade that? Okay. A couple of reasons. Number one, I look at this and I could say like, okay, I'm not surprised that it rallied. I don't mind saying that. I'm not surprised that it rallied. But with all due respect, okay, the day is young. You're 35 minutes into a trading session. You don't really have a feel for this yet, do you? Okay. I know I don't. Okay. Because I'm going to tell you, the advanced decline line is still pretty funky. It's back close to that 50-50 kind of crap. But the players in the game right now, pretty uncertain. Tesla's still feels a little heavy out there. Okay. Amazon's getting beaten up to some degree. Google's down. Okay. There's still a lot of pressure into the marketplace. And it's pressure that you may not necessarily recover from. Moreover, if you look down the list of usual suspects, the financials. So here's one that I am surprised. The financials almost matched their lows that rallied back up. Okay. Berkshire actually had their earnings, stocks getting beaten up a little bit. Okay. For those of you not aware, this is the first time in 500 years that Berkshire Hathaway has released earnings without Warren Buffett. You like the part about 500 years? Okay, he's a vampire. He's a vampire. He's been around for 500 years, but it's the first time in literally, okay, hundreds of quarters that they have not had, Warren Buffett at the helm over there. So you got that going for you. What's the expected move? Where do I always list the expected move? Where? Okay, I'm going to talk about expected move in a moment, but the S&Ps kind of continue to to forge new territory to the upside. And Microsoft continues to come closer to my butterfly, but is still completely okay, avoiding my butterfly, 54%. This trade sucks. Okay. There's not too many days you see the market rallying, and I'm like, come on, keep going. I want I want 300% plus on Microsoft. It's not about winning or losing. It's about me winning on this butterfly, and that's all it is. So again, trade today it's still like tentative. And you have Berkshire Hathaway that released earnings. And Berkshire Hathaway releasing earnings, for those of you that are not aware of this, Berkshire Hathaway is in the XLF. Moreover, it's the largest constituent to the XLF. So I'll pull it back up for a second. By the way, the symbol is so weird. There's BRKB, okay, and then there's BRKA. And the reason they do that is because like no one can possibly ever trade like A, because it is that's a real price. You know, it's basically like I don't know. Let's just call it $7 million. Like, how many have traded today? None. Okay, nobody trades it because it's absolutely horrible. But you can trade this, okay? Because obviously someone has to some degree anyway. So it is a really odd looking kind of volume in there. All right. With that being said, Berkshire B is and A are the largest constituents. Again, the largest constituents to the XLF, and the fact that Berkshire is actually down right now, okay, is obviously holding this sector down. Meanwhile, okay, back in energy land, there's been a reversal, specifically inside of XLE. Now, I do have a trade on ExxonMobil. I'm more than aware that I'm a trade on ExxonMobil. Okay, I got geopolitically screwed over here. We're not dead though yet, because there's still it's almost a $10 expected move, which still ironically brings us right in the wheelhouse of kind of where you want to be. There's a $10 expected move in ExxonMobil. So it's a humongous reversal though with the cash open. And this is the kind of stuff like in geopolitical events. This is a crap fest. It's a minefield. It's just waiting for you. And this is where like retail, they really get ground up in this, because by the time that you see that news, you know, and that this is why I'm not big on the geopolitical events. By the time you see the news, the trade is actually reversed already, like literally reversed. I did hear, you know, I heard Garrett this morning talking about shorting oil. He's going to sell some calls in oil. Okay. And I'm not sure I like the trade. Okay. But I get it. Like, I'm not sure I like the trade. Like, I wouldn't do it because, as I said, that, you know, war footing is always wildly unpredictable. Like, I've seen crap happen during war and I'm just like, okay, there's just forget it. Right. And I've seen moves in underlyings that didn't make any sense whatsoever. You see, okay, what was revealed, you know, for instance, like a week later. So geopolitical events are just, okay, mind-numbingly complex. There's just too much and too many moving parts to it. With that being said, let's go to a little bit to the expected move. So the Google in-out spread we've already covered. We covered a little bit about Berkshire Hathaway. We'll talk about some of the event trading stocks. You know, obviously this is nothing more than defense. This is anything to deal with travel right now. Okay, was getting beaten up this morning. I do want to cover that briefly, and then we'll kind of cruise back to the expected move. Travel stocks. Okay, this is jets, an ETF. Okay, for the airlines. There's some diminished travel expectations. I mean, again, talking about geopolitical events, so like, oh yeah, I really want to get on a plane and go to Mexico right now. So that's kind of out of the question. If you go on a cruise, you okay getting off in Puerto Vallarta right now? Anybody? I'm serious about that too. Okay. I'm not going anytime soon. Okay. I love it down in Mexico. Absolutely love it. I've been to Cabo. Like, I'm in Phoenix right now. Cabo's a 2-hour jet away. Okay. Flying to Cabo. Beautiful. Love it. Okay. No way in hell am I bringing my kids down there right now. No chance. Okay. And I'm like as close to the borders you pretty much get in a major city. And well, outside, of course, of San Diego. But yeah. And yeah, by the way, I've known a lot of people here in Phoenix and in Tucson, they own places in a place called Rocky Point. For those of you that don't know what Rocky Point is, Puerto Penasco. And there was a this is going back in the about 2 years ago. There was a crisis on the border. There was that many people closing that they closed the U.S. border crossing. So allow, if you will, because I was here during it, and I'm not going to mince words. They wouldn't let the U.S. citizens back in. They closed that border crossing. You had to go all the way and divert. And they closed the U.S. border crossing from Arizona, so you couldn't get back from Puerto Penasco. People were walking across the border. But if you were an American, you actually had your car down there, so people had to spend weeks in Puerto Penasco. The only way around it was to circumnavigate, which is not a very safe road. So there's no way in hell I'm going down, because I have friends that are like, yeah, we're going down to Rocky Point. I'm like, yeah, you go right ahead. Okay, right ahead. Yeah, you can get there about 3.5 hours from our house here in Phoenix. Okay, 4-hour drive from Tucson. Okay, did a lot of times. Done that drive many a times. Look at this, the S&Ps from down 80. Okay, almost massively unchanged. How's the volatility doing? It's crushing back, but it's I do want to bring this up. Volatility is crushing back, but not enough. Like again, I'm still of the opinion the volatility is still really high for the situation. I know the VIX actually hit 25. I don't give a crap. The VIX, I mean, the market wasn't even open then, but the volatility futures, okay, have crushed back, but they're still they're really high for the fact the S&Ps, okay, are only down 14. And this is one of those trades where like, oh man, you shoulda, you coulda, okay, but you didn't. I didn't execute into this because it wouldn't really give me that much time to it. But I'm telling you, based on this volatility, and I want to be crystal freaking clear, based S&Ps are there, okay, based on that volatility, okay, based on where the dollar is right now, gold is, that marketplace can reverse in an instant. So you can ride that pony, but you better protect any gains. If you're long right now, you can ride that pony on an intraday basis, protect your gains. Protect your gains. What does that mean? It means we start backsliding a little bit. You got to get out. You have to. Okay. I don't like it. I don't have to like it. I don't even want to like it. Okay. It is what it is. Do I really want to get out of this one? Oh, maybe. Okay. 240. 240 is not bad. Okay. Time. I was talking like 300%, but now like 200% is looking pretty good. Okay. 200% is looking pretty good. So Superfly, by the way, I love this. For those of you that have no idea what the hell I'm doing right now, okay. So they came up with these new zero DTE options, which everybody kind of knows about zero DTE, but they listed them now in Microsoft and Apple and Google. They're only listing Monday, Wednesday, Friday. But I built an alert that I actually send out trades. Like these are butterflies, okay, that I'm doing on Monday, Wednesday, and Friday. And I'm completely infatuated with it because I'll swing and I'll miss like 6 times and then I'll hit 4 or 5 in a row. Okay. And these things, I'm infatuated with them because I've gotten a pretty good feel. Okay. And everything I'm doing in here, just so you guys know, just around the expected move. Okay. It's around the expected move. And you can see you're like, Microsoft's nowhere near its expected move. Yeah, you're damn right. What I've gotten good at is measuring the right size fly. Okay. You gotta know the size of your fly. And it's been a really, really profitable strategy. And I'm totally hooked on them because they only came out, the first week of February. Like literally, they came out the first week of February. I'm exactly 1 month into trading the strategy. Okay. And I started off really, really strong. And then I had a really, really bad streak. I think I missed like 6 out of 7. And now I'm back on that pony. And I like them. Okay. There's nothing to me more like fun than trading the zero DTE butterflies. Okay. I love that crap. Because if you're looking for like instant gratification, like overnight trades, okay, it's the trade, man. It's the trade. I'm going to leave that one on for a little bit longer. Okay. Don't talk about it. Don't look at it. Don't think about talking about it or looking at it. But if I could pull out like a gain on Apple and then gain on Microsoft, think I'm going to take it. All right. Speaking of which, where's Google? Okay. Google right now, nothing. The problem that I have, okay, right now in the markets, I don't trust these S&Ps as far as you can throw them. I really don't. The volatility, again, is all wrong for the situation. Still a lot of volatility in here. And I don't care the advanced decline line has gotten better. I can see the tech stocks, but I can also see quite a bit of weight, including Google and Broadcom, okay, and Tesla. Okay, that's weight in the marketplace that we're rallying back up, but it kind of feels like maybe we peaked out a little bit over here. So we'll take this rally with a grain of salt. And in Microsoft specifically, I am looking for the door. Okay, I don't mind saying that either. I'm definitely looking for the door, but I kind of want to. I already took 100% gain in one of my butterflies, and when I take a gain of 100% in one of the butterflies, okay, it allows me to ride Microsoft much more, because even if I miss Microsoft completely, I have the gain in Apple, okay, to cover any loss that I would take in Microsoft. So it allows me, if the first butterfly I trade conservatively, the second butterfly I'm going to trade, I'm going to let fly. Like literally, I'm going to let fly. Sorry for the play on words there, but let's go into expected move. The expected move for the week, it's quite interesting. It's 143 bucks. Okay. So the reason I'm actually going to show you expected move, first of all, on two fronts. Number one, the expected move is always posted, okay, right here. Okay, it's 143. And I give you the date, the everything, and the link. Okay. So it is literally, I posted in there every single time you come in here on a Monday morning, it will be there. Okay. It's going to be there. So you got it. You know it. You love it. You got it. It's in there. And you have the link. That's the link to this chart that is hand drawn. Like I'm emphatic about like doing it. And most of the time I draw it on like a Friday afternoon, but I like to post it on Monday morning. Sometimes I'll draw it on Monday morning. Just depends on what's going on, how much I want to get out of here on a Friday. I'll tell you what, like last Friday, holy crap. Last week, okay, was last week a 4-day, I don't even know. Okay, last week was hellaciously busy. No, it was a full 5-day week. I went to Vegas though for like a day or two. It was very tiring. It was very tiring in any regard. Okay. As you take a look at this, $143 expected move. Pay more attention here. Okay. Geopolitical events changed everything over the weekend, but there's still $133 expected move. Now, what is interesting, okay, and this is where I was also talking about, it's all wrong. Did you know that there was a $67 expected move, okay, between Friday and Monday? $67 expected move. That's a lot. And that is what led me to believe, okay, when I was like, oh, volatility is all wrong for the situation. Not only do we have a $67 expected move, look where the market opened, okay? It was right near that expected move. The market literally opened, okay, near the expected move and then rallied from it. So we're almost back to where we started the week, which whatever, like an hour into a trading session, okay? I suggest though, one more time, okay, that you understand there is a very high probability of us rolling back over at minimum, okay, to the 68.50. It's like drawn moth to the flame over here. So just be aware of it. And we start slipping, as I said a moment ago, we start slipping and you're bullish, you got to bail. I don't care if we keep going higher. Okay, protect whatever gains you had if you're bullish, because this could turn right around on you in a second. Because what all you're seeing right now, like what's lifting markets? What is lifting markets? Nvidia is up 2%. Golf clap. Okay, Microsoft's up 1.5%. Okay, golf clap. Nobody cares. Okay, nobody cares. What else you got? Meta's up, but not doing much. Not going to hold the marketplace together. You got the energy sector up 2%. Okay, but that's crap filled. Okay, and although the financials came back, okay, you know as well as I do, these things can't wait to sell back off. So you're stuck between a rock and a hard place over here, and the volatility is really high for the fact that the S&Ps are only down 24. All right, they got back to almost unchanged, and here we go. We're going to slip right back down to 68.50, do a little dance, make a little love. Now, okay, we are still in this proverbial crap fest of a marketplace. I do apologize for that. There's not a whole lot I can do about it. Okay, as frustrating as this is, you got to kind of deal with it. So all you want to do in a time like this is you want to kind of like pick trades off like I'm doing. And when I say pick trades off, I'm not coming out and screaming like, big position. The only thing I have on that's a bigger position right now that I have on in a lot of accounts, I have the Toll Brothers trade on a lot. Okay. I don't mind saying that. Okay. I think Toll Brothers sucks. That's what I think. I have the Toll trade on a lot. Okay. I know there's only like basically 1,000 contracts in here. That's a $10 wide spread. This one, I personally have on a lot. And you go, why do you do a lot? Because this isn't a trade. This is more of a statement. Okay. This is a statement. I want to be short in the home builders and I want to be short in a big way. By the way, that's why I was warning you guys of the market backsliding. Okay. So if you're long, you damn well better be out right now. If you were long in the day and you're not out, okay, you're going to get pulled right back into it. So this one I've got on, but it's not a trade. It's more of an investment to the downside. And I don't mind saying that. Okay. And then everything else that I'm doing is I'm just trying to pick off shorter term trades. I'm trying to pick off like Google. I just think Google's going to test 300. So when test 300, okay, I'll bail. I'll make a couple of bucks, move on. What else am I doing? Zero DTE butterflies, okay? Doing a bunch of them. Why? Okay, because it's working right now. And if it's working right now, I'm just going to keep riding that, okay, and pick off gain, little gain, little gain, little gain. Okay, trades that I have 500 bucks of risk on, 500 bucks of risk, and make 50, 100% on them. Okay, all I want to do right now is try to grind and make a living. And I'm serious about this. I want to grind and make a living because the S&Ps, right, they're just stuck in the middle with you. And you know that when we move outside this range, oh my gosh, it's going to be violent. Okay. And I'm not, by the way, when I say it's going to be violent, just because we're leaning to the downside right now doesn't mean a damn thing. This thing could boom, it could explode to the upside. I'm not new. Okay. I have no, I'm not delusional either. Like I understand when you're in a tight range, like you've been in, we're just compressed and compressed and compressed. Okay. This is the most dangerous times in the marketplace that nobody even talks about. They're like, we're just channeling back and forth. We're not doing anything. Yeah, except we're channeling back and forth on a neutron bomb of freaking gamma in here. It's not safe. It's not good. Okay. It just like gamma just keeps adding up and just adding up and adding up. For those of you who are total geeks with your little spreadsheet, I got your sum of right here. The sum of all this gamma, okay, is freaking huge, is what it comes down to. And the longer we channel, the more dangerous it gets. And you can see like that is almost retesting lows. So, it formed a double bottom, except nobody cares because double bottoms don't exist when you just keep rolling risk forward. It just doesn't exist. Okay. And then they're not going to care anymore. Meanwhile, down at the bottom of your screen, okay, even though we want to sit here and tell you that the marketplace rallied, which it did, I remind you, this volatility construct is still up, which is VVIX. Okay. The volatility futures themselves are still slightly elevated, which again, I don't feel warm and fuzzy. Okay. I don't feel warm and fuzzy at all. And the financials actually maybe rolling over here a little bit in the last couple of minutes. Okay. It's good stuff. Onward. Let me just, okay. Yeah, somebody said, send me some trades. Yeah. So the last trade I actually sent out would have been Google on Friday. Okay. I'll send trades. Okay. I'll send trades. I'm just, this is where the kind of stuff that I'm going to send though, I might actually send like a put butterfly today. We'll see. Okay. Maybe we retest some lows this week. Okay. One thing I would say, almost, okay, with a certainty is you're going to hit that or you're going to hit that this week. Okay. There's a lot of people like, no, we're definitely going higher. I'm not disagreeing with you. So it's okay. It's okay. We test higher though. If you actually tested into the upper edge of the expected move, just so we're clear. Okay. We were here this morning. If you test the upper edge of the expected move, that is the all-time high of the marketplace. All-time high. Okay. Can you imagine that? All-time high. Okay. War breaks out. You're like, all-time high, because it goes right into the logic. Market don't give two craps, doesn't care. Okay. Remember, the People's Republic, okay, of Nvidia, they don't care. Okay. I don't want to call it the People's Republic of Nvidia. That just isn't like that fits for Google. Okay. It fits for Google, the People's Republic of Google, or for like Nvidia. Okay. It's like, it's Jensen land. That's more like what it is. It's Jensen land. It's only a matter of time, seriously, before not only these companies start buying large swaths of land. Okay. There's going to be a takeover. Like somebody's like Nvidia took over like Venezuela. It's going to happen. Okay. It's going to happen. Okay. And they'll just like everybody in Venezuela have a job like making chips. Okay. Working for AI. It's not half bad life. Okay. Professor Bierman will end up down there. Okay. In Venezuela, uh, working for AI as well. Yeah. You have a very professor, shirt on this morning, don't you?
I ran out of shirts. No, actually, I was gonna make a joke with you today, but there's no joke about this. Like 2 weeks from now is March Madness, but
Yeah.
March Madness for me has already begun today, just by waking up today and seeing gap downs of stocks that are not even linked to the Iran conflict.
Yeah, look, the markets are always looking for a reason, a catalyst of some type,
Oh
and
yeah.
they're getting it. But like, if you look at the headlines, people are fully leaning in and buying into the idea that the geopolitical event is moving everything. If that were true, then
No.
why is Nvidia up 2%? I mean, Nvidia is the one that carried us up here, but if it's true, so why is Nvidia up 2%? Because you got to, tell the whole truth. And the truth is, Nvidia does not give two craps. Okay. The People's Republic of Google, okay, and Jensen land. So
Let it go,
Jensen
John.
land.
You gotta let it. You gotta
Everybody
let
gets
Larry
to wear a
Ellison go.
leather jacket everywhere they go.
Oh,
That's the
please.
whole idea of Jensen land. You get to wear a leather jacket everywhere you go.
Who
Um,
annoys you more, Jensen or Larry Ellison?
Larry Ellison by far.
Oh,
Okay.
really?
He's not a person, man. He's a demon. He's actually truly like a vampire. He has hooves. He does. He has hooves. I'm convinced of it. And
Let it
now,
go.
what's he going to control now? Okay, everything. Okay, they Paramount, Warner
I
Brothers.
know.
Oh
That's
man. So I just okay. Can you imagine like if he's starring in like some of the superhero movies? Because he's that vain, he would do that. Remember, this is the man that when he left Oracle, okay, one person couldn't replace him. They had to hire two CEOs.
well, you know he's like a third or fourth dan black belt in karate. Like he's so he would actually make a really good superhero.
I didn't know that. I don't really want to know that. So I don't know if you remember. You may not have been early enough think or swim, but very early think or swim. Okay, our biggest client initially, and biggest client by like account size, was his right hand person at Oracle,
Really?
and obviously a huge stockholder. Okay, no names to protect the guilty, and we went out and we hung out. This guy was actually only a few years older than me. Literally, he was maybe 5, 6 years older than me. He's a young guy. Um, and in hanging out and so forth, got a couple drinks into him. The real stories came out. It's that shaped my view of Larry Ellison ever since that event. So if I have a distorted view of Larry Ellison, it's because I hung out with one of the people that helped found the company and told me. I also, one of our other large clients, um, she was a right-hand person to Elon Musk. And those are interesting stories too. Also, not positive stories, but in the end of the story, okay, as intoxicated as she may have been telling the story, the end of the story, she goes, I was like, would you end up working for him again? She goes, oh, hell yeah. The guy's an absolute genius. This is the most incredible things like ever done. But she was very early days of Tesla when they were having a lot of problems. She was there the days where they said, everybody stop everything and everybody sells cars now because if you don't, we're out of business. She was there for that. Some interesting stories. So these were all clients, obviously, of early Thinkorswim. Okay, great stories of those. So Microsoft may happen for me. So again, I'm no illusions here, Jeff. I think we actually are going to trade 68.50 and channel in and around it.
Yep.
The bigger trade today, honestly, the bigger trade and where I may execute some positions, the latter portion of the today, like the last like 2 to 3 hours of today's trading session, I would say like literally the last half of the day, we may actually make another break for the downside because you're constantly going to be stuck in a construct of, I don't want to go home long. Okay. I think a lot of people probably woke up in the middle of the night. I did. I woke up in the middle of the night, looked at the futures, and I was like, holy crap, they're down 115. And it was because of a geopolitical like driven. So in geopolitical events, as I said, it's incredibly unpredictable, right? And when that risk comes, like all of a sudden, like they'll see a drone in the air. We're so efficient today. We'll see a drone in the air. That drone's heading towards Saudi Arabia. Boom, the markets are going to get hammered. It's really hard to want to go home long in those situations. So there's going to be some late day kind of markets possibly selling off, and maybe it's not waiting for it. But as I said to you, those of you that were long, we're going to slide a little bit, and slide we are right now. S&P's 60, break. Oh, it's going to get good out there. And my Microsoft butterfly, come to me, Microsoft. Jeff, it's all yours. Have at it for the next hour. By the way, today I reserve the right to pop back in at any time throughout the course of the day because it could get crazy. And if I do actually pop back on, I'll send an alert to everybody, let you guys know I'm actually going to come in here. So, hey, look, I wish there was some more opportunities this morning, but I'll jump on some. It's pretty volatile out there. I'll shop some opportunities. By the way, look for an alert on Google if we start breaking down a little bit more in the 300 level. Jeff, all yours.
All right, great. All right, so let's get this party started. I want to make sure